What is up, everybody? It's Tyler from Bullseye Investing here. Today, we're going to talk about my plan for GameStop 2.0, round 2 of the short squeeze. We're going to run through the scenarios, and at the end, I'm going to tell you my opinion for the optimal plan for you. So, hit that subscribe button if you haven't already, and let's just get straight into it. GameStop, what a rocky ride it's been, with now a market cap of $6.396 billion, share price at $91.71, going up more than 100% just today, with after hours showing that it could continue. We'll get into that later. Round 2 of our short squeeze, with 65 million shares changing hands today and trading getting halted multiple times. It seems like the craziness will never end, with Ryan Cohen tweeting this cryptic tweet from as one of the believers of GameStop, the founder of Chewy. He put an ice cream cone and a frog picture, and people are trying to decode what that meant. Somebody even jokingly said that it was why GameStop continued to go up. But you probably already knew all of this already. You're here for my input on what the future of GameStop should hold and plays that you can make on this stock. So I think that the optimal way that we can evaluate what's going to happen is look at history, okay? In these crazy times of seeming almost irrationality, I'm convinced that our best bet is to look at history to see what will happen. We need to note a couple of crucial differences from this time and last time, however. Okay, it's not the same scenario. First of all, the main one is that short interest is much less now than it was in round 1. That means that the short squeeze will most likely have a much less pronounced effect this time than it did last time. That being said, we're most likely not going to have as much of an explosive graph as we did last time, okay? It hit in January 27th, 2021. It closed at $350 a share almost, and the 52-week high is almost $500, okay? We're not going to see that this time, most likely. I'm going to place our most likely maximum for this push to be $250. I believe that most likely, unless the craziness continues to a point where we can't even quantify or imagine where it's going to head, $250 will be about the top that the charts will go, okay? Say if it hits $250, you're very lucky as a shareholder, and I would say sell off most of your shares, of course, unless you're a long-term investor. But let's slow down here and let's take this case by case on what could happen tomorrow. If the momentum continues, I would sell around $200, maybe even a bit less if you can afford to lose a bet and still want to go along for the ride. Maybe you could leave about 25% of your position less as a swing trader, just to see where the momentum carries. Of course, if you're in GameStop for the long term, as I said before, you're going to hold a lot more than this, maybe even have the self-control to hold 100% even as it hits new highs, but for the week. But I think that this is a suboptimal move in this position to just keep holding. Even if you're long term, I would still sell a little bit. Now let's go to the interesting stuff, however. This was the price at the end of the best day of round 1 of the short squeeze on January 27th. Note how the pre-market indicated that the momentum was going to continue, and it did, as the stock did open higher the next day, January 28th. But then it took a tumble, okay? So the pre-market didn't indicate what was going to happen this day, and I have a pretty close feeling that this is what's going to happen tomorrow, okay? This is the reason that I said to sell in the chance that case 1 occurs. That's because of case 2, the potential tumble, okay? I don't think that you should take the risk of the tumble at this point, especially because you have profit if you're holding, and the investors who bought in at the peak of round 1 also lost a lot of money. Now, you could be the one buying into the peak if you're thinking of jumping into this and taking the tumble. So, of course, it's extremely hard to tell when that peak is going to occur, but most likely when the tumble happens, we are going to see a rebound. So if the tumble does happen, don't sell in desperation and just ride it out. But also, if you're not invested, don't try to catch the falling knives by buying either, because we don't know how far it's actually going to tumble. So my final plan, I would say that you should not buy in right now if you're on the sideline, but if you are invested, tomorrow maybe sell about 50%, okay? 50% of your portfolio near market open. I know everyone on Wall Street Bets is saying to hold, but I truly don't think that that is optimal. You can't predict if the stock will turn around or if it will continue to go back up, but you do know that you have your profits now. So you'll have about 50% in the chance that the stock will continue to go up, and you'll have 50% out of the stock by taking profits. That means that you should have roughly taken about the amount that you originally put in, because most likely if you bought the stock today, you have 100% gains, or if you were holding, you have 100% gains today, and you're playing with the house's money at that point, which you can afford to lose. Thanks for watching. This was a short video, but please subscribe, like the video, let me know what you think about this in the comments section below. Thanks for watching.